Hello, friends. Welcome to OHAVA's weekly update on money and economy. We begin with news on the global front concerning the world's second largest economy, that is China. Last week, China's central bank announced that the reserve requirement ratio for commercial banks will be reduced by 50 basis points from February 5th. The move is expected to inject 1 trillion yuan worth of liquidity into the market, that is US dollars worth 140 billion. As the government is trying to quell panic and revive investor confidence as fears over a stock market rout and worries about China's economic prospects continue to rise. It also slashed the re-lending and re-discount rate for bank loans designated for small firms and agricultural businesses by 25 basis points to 1.75%. Some analysts feel the RRR move is helpful, but it will take more to restore confidence, which may require fine tuning the regulatory environment beyond traditional fiscal and monetary stimulus. And if consumption and real estate market are weaker than expected after the Lunar New Year, there may be further interest rate cuts. Moving on to news on domestic front, India's banking system liquidity deficit is at record levels due to outflows towards tax payments and limited government spending. The deficit widened to rupees 3.34 lakh crores as on Jan 23rd, nearly tripling from the start of the month, data from the RBI showed. Overnight market lending rates like the call money rate and repo rate have remained over the official RBI repo rate of 6.50% as a result of this liquidity deficit, and they are trading in the range of 6.75% to 6.85%. So far, RBI has conducted shorter term repo auctions to infuse cash into the banking system but refrained from infusing longer term money. However, some analysts feel the RBI will keep liquidity in deficit mode in the near term but keep reducing the size of deficit steadily going forward. Moving on to important business news, the big merger between Colormax Entertainment, Bangla Entertainment, formerly known as Sony Pictures Network, on one hand, and Zee Entertainment on the other, which was potentially worth $10 billion, has been called off by Sony, citing that closing conditions have not been satisfied. Zee said it had also received a demand from Sony for a $90 million termination fee over alleged breaches of the terms of the deal. The merger, which was announced originally in 2021, has run into controversies as it had hit several regulatory roadblocks before the National Company Law Tribunal cleared the deal in August. The merger would have created an Indian media giant, bringing together the two companies' linear TV networks, digital assets, production operations, and program libraries. Sony was to provide a large cash injection and control a majority share stake of close to 51%. One of the key issues, as reported by media outlets, was that the two sides were unable to decide on leadership control for the combined entity, as Zee top leadership is being investigated by the market regulator SEBI. According to Reuters, the deal was perceived as crucial for the survival of the companies in a very competitive market, especially amid the impending merger between Disney's Indian business and the media assets of Mukesh Ambani's Reliance Industries. The stock price of Zee crashed by 32% immediately after the news, although it recovered somewhat after the company announced that it plans to take legal action against Sony for calling off the merger. And finally, we end with interesting news on India's top two private banks, HDFC Bank and ICICI Bank. Even as the stock market trades near all-time highs, the stock price of HDFC Bank has been under pressure in recent times and has hit a 52-week low of Rs 1425 on January 23rd. In this year so far, HDFC Bank shares have nearly fallen 16%. One of the main reasons was its Q3 FY24 financial results, which apparently disappointed investors, and another purported reason is selling by foreign portfolio investors. On the other hand, shares of ICICI Bank hit a record high of Rs 1059.4 On Jan 23rd, after its third quarter profit beat estimates on robust loan growth and margins met expectations. ICICI's performance is thus in sharp contrast to that of larger rival HDFC Bank, and ICICI Bank is now trading at a 15% premium to HDFC Bank on a core price to book value basis. That's it for this week from us. Do click like, share our content if you found it useful, and do visit our website www.oava.in for information on our courses. See you next week.